Bullish and bearish divergence signals can be used to anticipate a trend reversal. These signals are truly based on the theory that volume precedes prices. A bullish divergence forms when OBV moves higher or forms a higher low even as prices move lower or forge a lower low. A bearish divergence forms when OBV moves lower or forms a lower low even as prices move higher or forge a higher high. The divergence between OBV and price should alert chartists that a price reversal could be in the making. The chart on the screen shows a bullish divergence forming in July. On the price chart, the stock moved below its June low with a lower low in early July. OBV, on the other hand, held above its June low to form a bullish divergence. OBV went on to break resistance before the stock price broke resistance. This was a classic case of volume leading price. The stock price broke resistance a week later and continued above 20 for a 30+% gain. The chart on the screen shows OBV moving higher as a stock trades within a range. Rising OBV during a trading range indicates accumulation, which is bullish. The chart on the screen shows a bearish divergence with volume leading price lower. The blue dotted lines identify the divergence period. The stock moved higher as OBV moved lower. Also, notice that OBV broke support during this divergence period. The uptrend in OBV reversed with the break below the February low. The stock, on the other hand, was still moving higher. Volume ultimately won the day as the stock followed volume lower with a decline into the low 30s. The chart on the screen shows a stock with OBV forming a bearish divergence in April and a confirming support break in May.